Hi, my name is Shuli Kalza and I'm here to bring you the Ask Shuli C Real Estate Show. In this episode, we're going to go over 10 key terms that you need to know during the home buying process. The first two terms that we're going to go over today, I hear all the time being used interchangeably, but they're actually very different. The first one is pre-qualification. So before you even start looking at homes, you should at least obtain a pre-qualification. Now, a pre-qualification just means you've had a basic conversation with a lender. They may or may not have run your credit, and they're going based on stated income and basic answers to questions. So there hasn't been any verification of employment, assets, or debts yet. This is a good place to start. However, it does put you at a disadvantage. Anybody and their dog can go online and get a pre-qualification for a mortgage nowadays just because of convenience that people demanded. Big banks made it very easy to obtain. The reason this puts you at a disadvantage is because you don't actually have a realistic picture of the kinds of terms that you can qualify for because you haven't gone through the full pre-approval process. So pre-approval is the second term that we're going to go over. A pre-approval basically means that you've had that conversation with a lender. They may or may not have issued you a pre-qualification, but you've also sent in the documents that they needed in order to verify your employment and your income, and they've gone over your credit report with you. Now, this doesn't really take that much more time, but it gives you a very realistic picture as to what kind of terms you're looking at. Now, the lender I recommend always does this ahead of time. It takes them less than 48 hours, and then the buyer is very well informed on lending terms from the very beginning. But be wary of those big banks who quote you different things over the phone or online based on a pre-qualification. Now, the third term that we need to go over is showings themselves. Now, anybody who's watched HGTV kind of determine what showing means. It means showing a house. But you may not know some key things that go into it. Now, when you walk into a home, a lot of realtors will try to get you to focus on things like paint color and the kind of faucets or fans that are in the house. But what you really need to be looking at are the layout, the flow. How will this home work for your day-to-day activities and your needs? Now, after you've looked at homes and narrowed it down and decided which one is best for you, that's when you would make an offer. Now, an offer is where your realtor fills out the purchase contract for the home based on the initial terms that you want to offer. But when it comes to writing the offer, you should really make sure that your realtor has done their research on the property and can give you good solid recommendations on where you should come in for your offer and be able to predict to some length where the seller will come back and prepare you for that process. Once negotiations are completed, you go under contract to purchase the home as long as both parties have agreed. Under contract basically just means all parties have agreed to the terms and now you're committed to buy the home. Your realtor can go over the intricacies of different situations and contingencies that could arise that prevent you from buying it after that point. But the most important thing is once you're under contract, no one else can swoop in and take that home from you. A few of the terms that you need to know when you go under contract are closing costs, earnest money, and close of escrow. So let's go over those now. Closing costs are not covered by the VA. There are programs out there that would give you a grant toward closing costs, but I never recommend these programs unless it's a very, very specific situation because they come with unfavorable rates and terms. So be prepared to see these closing costs. Your realtor should be able to give you a very accurate picture of what you could expect for closing costs. Now, this brings us to number 7, earnest money. Earnest deposit is due within 48 hours of going under contract, and it's held at the title company. And the earnest deposit is just kind of your in good faith money, meaning that you're a serious buyer and you intend to purchase the home. Now, earnest money can go towards closing costs or prepaid homeowners insurance and other things that might crop up during the transaction. And a lot of agents and lenders will tell you it's your skin in the game and you shouldn't expect to get it back. There's a market standard for every area. Your realtor should be able to make a recommendation for earnest deposit. Sometimes the seller has a minimum earnest deposit requirement because the earnest deposit serves to show how serious of a buyer you are and can actually strengthen or weaken your offer. So be sure to get guidance from your realtor on what amount will work best in every scenario that you offer on. Our next term is the title company itself. So the title company acts as that neutral third party that helps to coordinate the sale of the home between the lender and the buyer. They're going to be running the complete title history of the property. They're going to be coordinating with the HOA. The title company is also the one who holds the earnest deposit in your escrow account. You've heard me say escrow a lot, and I'm sure you've heard that term, so I want to make sure you know what it means. Escrow simply refers to that time period between going under contract and closing on a home. Close of escrow date, you will decide when you write the offer, but it can be negotiated with the seller because they might require a different date. Once that closing date is decided by all parties though, it is very difficult to change. That brings us to our 10th and final term that I want to go over in the home buying process today, and that's signing and closing. So a lot of people interchange or think that signing occurs on the close of escrow or closing date. It doesn't. It is always the goal to get the documents wet ink signed prior to the close of escrow date. All this means is you're signing with a pen and a notary present or with a power of attorney all the documents in the transaction. When you go to pick your close of escrow date in the very beginning, keep that signing in mind and make sure your realtor goes over the specifics and what options you have. Now, on your closing day, it actually doesn't require a whole lot of involvement on your part. On closing day, all the signed documents get sent to the lender. Once the lender receives all of them, they fund the loan. So they basically pay for the house. Once that happens, the title company gets everything together and sends it to the State Department to record the deed. Once the deed records, your realtor should get a notification and should let you know, congratulations, you're a homeowner, and then coordinate getting your keys. Thank you so much for tuning in. I know this episode was cram-packed with information. I mean, we went over 10 terms and, little ones in between as well. If you have any questions, don't hesitate to message me. I want to answer them. Thank you again for tuning in to the Ask Julie C Real Estate Show, and we'll see you next time.